All right, Ray the CPA here. Good to see you. So, right now I want to talk to you guys about the audit report. Okay? So, at the end of your audit, this is part of our audit series. Remember, we've got an audit series, a not-for-profit series, a business advisory series. So, check out all the videos. There'll be cards during the video that'll come through, probably right here on the top. Or depending on the orientation, maybe it's up here on the top. But anyway, they'll come through and they'll show you some of the other videos that we have on the channel. Check them out at your leisure. That's why they're here. Anyway, this is the audit series. So we have several episodes already in the audit series, and we've gone through the PBC list. We've gone through the engagement letter. We've gone through a general introduction to audits. Now let's talk about the opinion letter, aka the audit report. So the audit report consists of two pieces. You're going to have an opinion letter in the front, and then you're going to have your audited financial statements are going to be the rest of that report. So let's dig into it. So for public companies, publicly traded companies, that means companies that where the public can buy shares and trade them on any given stock exchange. For the SEC, for U.S. companies, it's mandatory for them to have an audit. But why would you, if you're watching this video, most likely you don't have a team or an internal audit program. So why do you need an audit report? Well, if you're being lent money or you're raising funds, whether you're a non-profit, not-for-profit, small business, medium business, that's typically why you need an audited financial statement. That's why. Is because someone other than you wants to look at the financial performance. And typically that's because you're seeking funding. There's a lender out there, you're going for a loan, a line of credit, a donation, a grant, and the audited financial statements help that person make a decision about investing into your company because it helps your transparency, basically. It shows, hey, somebody else said that you're not completely full of crap. And essentially what audited financials do is you say your financial result is X. An auditor is somebody independent of you that says, yeah, you know what, within a reasonable standard deviation, this person is on the money. Within a material aspect, the spirit of these financials are good. So the reason you get an audit is because you don't want somebody looking at your financial statements to say, this is completely different. I made the wrong decision based on these financial statements. An auditor comes in and says, you know what, I've kicked the tires on this thing. They're pretty darn close to this. With a material respect, this is accurate. Okay, and with a material, they'll set materiality. Basically, the gist is the spirit of the financials are the same. A decision maker outside of your company wouldn't change their mind based on the small differences the auditor may find, okay? That's what it means to be materially accurate. All right, so useful for companies seeking funding, nonprofits, for-profits, getting loans, lines of credits, investments. Okay, so what's in this thing? So the audit opinion is a written letter and it's attached to the financial statements. The financial statements are going to be the face, which are the balance sheet, the income statement, cash flow statement, comparable. Usually it's going to have 2 years worth of information, and then you're going to have notes to the financials. It all really makes sense once you look at it. The notes to the financials tell you things like what method of accounting, accrual or cash basis, what other things happen. There's usually a footnote on fixed assets, how it basically tells you how the company put their financials together so that you know that this company's financials are going to be consistent with the prior year and with other companies. So remember in the intro to audit, that's what we talked about. So on the opinion letter, there are 4 pieces. One, you're going to have the responsibilities of the auditor. What did you expect to get out of the auditor? The auditor audited this in accordance with generally accepted auditing standards. We're looking for XYZ. For the most part, the auditor is going to basically say, we did the best we could. We applied appropriate due diligence to auditing this financial statement. So the responsibility of the auditor. The auditor is never going to say 100% this is accurate. because they can't. They're going to say, based on what we looked at, based on these procedures that are acceptable procedures based on this criteria, the generally accepted auditing standards, we did the best we could, and this was our responsibility is to just do that in accordance with this and give you an opinion based on our procedures. So that's the first paragraph typically. The second paragraph is usually the scope. Here's what we did. So here's how we did it, with what methodology, with what responsibility. I'm going to state my responsibility, then I'm going to state the scope, what I looked at based on my responsibilities, and then finally I'm going to give you an opinion, right? That third paragraph is going to say, okay, the opinion is. Now there's 4 types of opinions. I've typically seen the first 2. I've seen the third one once, and I don't think I've ever, well, no, I take that back. I've seen the 4th one a couple of times, so I've seen all of them, but the last 2 are rare. First one, clean opinion. You did it within these are accurate financials. These are materially stated financials. These are materially accurate, okay? That's the first opinion. You want that, you need that. That's how you tell if you have a great CFO or a great controller coming in. Years before you had a different opinion, and now you have an unqualified or clean opinion. That's a good thing. Next, you have a qualified opinion. These financials are great, with the exception of this thing over here. And that means that your organization made an accounting error. Maybe you recorded revenue on the cash basis and you're an accrual basis company. We'll go over that in subsequent videos, or the basics of it. But think of the qualified opinion. You're good except for this thing, right? Qualified opinion as opposed to unqualified. This is all the way good. So I don't have to qualify it because it's all the way good. So I don't need to give you context. Qualified, not terrible, but something went wrong and I have to talk about them, okay? An adverse opinion. That means that something was so wrong that I can't just qualify it. I got to tell you about this. This is a bad opinion. You don't want an adverse opinion. That means that something, maybe I got whiff of something that really looks like fraud and there's another investigation to come, or there are legal consequences. You don't want to have an adverse opinion. And then finally, a disclaimer of opinion. So 4 types, that's the 4th, a disclaimer. That means I couldn't do, as an auditor, I couldn't do what I came here to do. I couldn't audit because there was a scope limitation, right? In my audit, in the engagement letter, I told you what I wanted to look at. You withheld documents, or you didn't have documents available. There's a million different things, but it basically says I can't even give you an opinion on these things because I didn't get what I needed to give you an opinion, okay? So now you've got a quick and dirty on the audit report. Again, the purpose of the series is to just wet your beak a little bit in these topics. If you have further questions, you can always comment. You can always email. My email and everything is on this channel. And let me know what you need. So again, I love the interaction. A lot of these videos come from the questions that I've received. So we're going to continue to work together to put out the best content. All right? So as always, this is Ray the CPA. I enjoyed our time together. Subscribe, comment, and let's interact. All right? Thank you very much. Have a great day.